India's GDP growth has come in at 7.6% for the July-September quarter. That's a tad lower than 7.8% that we saw in Q1, the April-June quarter, but it's far higher than estimates. GDP was estimated to grow 6.8% in Q2. That's according to 41 economists polled by Bloomberg. GVA, which strips out indirect taxes and subsidies, is estimated to have grown 7.4%. That's compared with a growth of 7.8% we saw in the previous quarter. GVA growth was pegged at 6.8% according to Bloomberg estimates. Now here's a look at sectoral trends. Manufacturing, construction and utilities all saw double-digit expansion on an annual basis. Annual agricultural growth was a tad bit tepid. Agriculture grew 1.2% in Q2 compared with 3.5% in Q1. Mining grew 10%, up from 5.8% in Q1. Manufacturing expanded 13.9% against 4.7% in Q1. Electricity and other public utilities expanded 10.1% versus 2.9% in Q1. Construction grew 13.3% compared with 7.9% in Q1. Meanwhile, services, which was expected to continue to remain the largest contributor to growth, was actually a little bit underwhelming. Trade, hotels, transport and communication expanded 4.3% versus 9.2% in Q1. Financial sector grew by 6% against 12.2% in Q1. Now, in expenditure trends, government expenditure and investments both saw double-digit growth. Private consumption, meanwhile, was a tad bit underwhelming, growing by 3.1% compared to 6% in Q1. Government final consumption expenditure grew 12.3%, while investments, reflected by gross fixed capital formation, grew 11%. Now, the outlook for the rest of the year changes a little bit after today's figures. While H2 is expected to see slower growth because of a multitude of reasons, the forecast for the full fiscal year might see a little bit of an upside after today's figures. Stay tuned to BQ Prime. We'll continue covering today's figures.